This screen is intended for the main system administrator, admin, only. In this video, we will explain the screen shown in front of you and how to use it step by step. Configuring this screen correctly guarantees that HR leave, timesheet deductions, and salary calculations are perfectly automated according to the company's rules. This eliminates manual math errors and ensures accurate record keeping across your entire workforce. First, check the Allow Negative Leave Days box if you want to permit employees to borrow against future leave accruals. You control exactly how many days they can borrow by entering a number in the Max Days Allowed input box. For example, if an employee has a current balance of 15 days and you set the maximum allowed to 5, the system will let them take up to 20 days of leave. If the box is checked but you enter a value of 0, the system strictly limits the employee to their available balance. They cannot take any negative leave. As a built-in security measure, if an employee's balance drops to 0 or goes negative, an admin password is required to approve the leave request. This ensures active management oversight. Next is the Leave Salary Calculation Basis dropdown. This determines how the system calculates the financial value of a single leave day. Leaving the value set to 0, which displays as same as payroll policy, commands the system to pull rules directly from your default payroll settings. That usually means either a fixed 30-day period or actual month days. You can override those standard payroll rules by selecting a specific numerical value, such as 360 or 365. When you select an override, the system uses a specific formula. It multiplies the monthly salary by 12, divides it by your selected number, like 360, and then multiplies that result by the number of leave days taken. You can only change this calculation basis if the company setup uses actual month days. If using a fixed 30-day setup, this dropdown is disabled. Moving down, locate the Use and Cash Leave checkbox. Encashment allows an employee to trade accrued annual leave days for a cash payout instead of taking actual time away from work. If an employee has an annual leave balance of 20 days and they choose to encash 10 of those days, they receive the cash payout. Their available leave balance immediately drops to 10 days. The system enforces a hard rule regarding this feature. Negative leave days can never be encashed. Look at the middle block of checkboxes, starting with the restriction on creating additional leave. Checking this box prevents employees from extending or stacking consecutive leaves. They must be officially registered as returned from their previous leave before a new one can be created. Just below this, you configure early returns. Consider an employee who books and is paid for 20 days of leave, but returns to work after only 10 days. The system gives you 3 adjustment options to handle the financial difference. The first option is Create Loan. The employee refunds 10 days of untaken leave salary, and those 10 days are restored to their leave balance. The second option is Deduct Leave Days. The employee keeps the full advance payment, but the 10 untaken leave days are permanently deducted from the balance. The third option is Keep Balance. This is primarily used when the company recalls an employee early. The employee keeps the full advance payment, and they also keep their 10 untaken leave days in their balance. Selecting the correct early return option prevents administrative errors and keeps your payroll aligned with actual employee attendance. At the bottom of the screen, we have radio buttons for leave provisions. Provisions are liability funds automatically set aside to cover future leave payouts. You can choose to calculate provisions continuously across the whole year, regardless of whether the employee is on paid or unpaid leave. Alternatively, you can select the option to halt provision calculations whenever an employee is on unpaid leave. Finally, look at the probation offset dropdown at the very bottom. Setting a month delay here ensures the company does not accrue financial liability for an employee's leave until they have successfully passed their probationary period. Check your selections, then click Save and Close to apply your configurations. Once saved, the Hinawi ERP system is fully automated to handle complex leave scenarios, early returns, and accurate payroll provisions for both HR and timesheet employees. Thank you for watching. For any further clarifications, please reach out using the contact information on your screen.